Hi, and welcome to our elementary school news. Today's lunch will be hamburgers. Hit it with it.
You're a stand-up comedian. What to do with $20,000? What are you doing with $20,000? They make the videos on what to do with $20,000 all the time.
Hey, don't forget your boy over here, man.
But it's like, man, it drives me crazy because it's like, it's not a one size fits all. So instead of looking at what to do with $20,000, one size fits all, let's talk through this a bit. Let's really figure this out.
I'm gonna blow your shirt off, man.
Yeah?
I'm gonna totally blow your shirt off because I broke this down into, hey, what happened? This is so hard, right, to figure out, like, who are you, what is your life like, and all this stuff. So we did 25, 45, and 65. That's how I did it, anyways.
No, I've got some good notes there just with that. I know you worked on the charts.
I got a little bit.
Some notes there, but so real quick before we jump into that, I've got a. You had an embarrassing story a little while back you shared. I don't know if anybody caught that.
Just one?
Well, you've got plenty, but when the child mistaked you for a homeless man because
I'm saying, you got to catch up, man.
Step up your game. So, we're managing finances. I think, I don't want to like pat backs or anything, but I feel like, hey, I'm doing okay with life. We're doing okay.
You or us?
All of us.
All of us.
We're comfortable. Just, things are good. But cars aren't the priority for me. And so I've got a 2014 Ford Focus. I've talked about it a bit. I had an F-150. I sold it. It was paid for. I sold it, and I was like, you know what? I really don't need it. I don't want to pay like the fuel on it and stuff. So I sold it and just have this little get-around car. Well, this get-around car has a transmission issue, and they're notorious for this. I didn't realize that when I bought it. And so last night I went to meet up with you, and so we were meeting at this place, and this place seems to be one of those that it's pretty casual, but it's, somewhat downtown Tampa area, and so everybody tends to drive by in like a Ferrari and like rev their engine, try to look cool. Well, I'm pulling in with the Focus, and the transmission messes up, and it kicks in neutral, and I was accelerating. So it's like in this Focus, and I'm like, oh gosh, I really just kind of like just make sure I parked away from everybody.
You imagine
they didn't
that?
See me get out thinking that I'm Mr. Cool.
Everybody looks at you like, oh, that's cute, Mr. Ford Focus.
Yeah. So it wasn't as crazy as yours, but a little embarrassing story there for me.
That does happen. I mean,
humble pie.
Humble pie. And you're looking over. Oh my God! I hope nobody saw that there.
I'm like, I just don't want to spend the money on a vehicle. Like, why?
Well, in my truck, that you drive that for a couple weeks because when the truck breaks down, it's inevitable. It just breaks. This weird stuff happens, or you hear a noise and you want to stop, but.
Because it's a 1940s.
Oh, it's 80 years old, right? So something always, is breaking. But when the first time it happens, you're like, oh God, this is so embarrassing. But then after a while, you're like, no, this is normal. It's just broke down.
But it's a 1940s.
Yeah, you get a pass on that. And people help you push it and stuff.
When you're rolling up in a 2014 Ford Focus, revving your engine.
The little hula girl in the window, like the bobble hula.
Yeah, it's like,
oh man,
I look dumb. So okay, so let's jump in here. All right, so what to do with $20,000? We can kind of go through that. So just starting out, 25-year-old. I know you mentioned it.
Yeah.
I'll let you kind of take that, kind of tell me a little bit about what you're thinking there, what a 25-year-old or somebody just kind of getting going, what they should be looking for.
So I had to pick something, right? And if I'm 25 years old, I don't know much, maybe I'm new. I keep hearing about ETFs and things. So for me, I would just pick an ETF. I got one here. I just picked the SPYG because it's popular. A lot of people use it. And it's also very liquid. So very important that if you're going to be buying an ETF, you don't want to buy something that's illiquid or not very popular. We could do a whole video on that. But so I just got the performance here, just to kind of show if you were to do this, right, and like participate, what would you expect, right? It's not quite the same as the SPY. I put the SPY in orange up there so you can see the difference. You could zoom out through time periods there. You could also buy the SPY. I'm just saying, something to do there. This SPYG is more growth focused, so it's going to have moments where it's outpacing, and you're not going to get as much of a dividend, I believe. But I'd use that or a mix of that or something. Just keep it simple. There's not much with $20,000 at 25 years old you're going to do. I think you'd be more cautious about the account type that you use, and you just get the ball rolling, right? You're 25, you don't need to pick 100 stocks or whatever. Just get the ball rolling.
Okay. Yeah, and I think really breaking that down, SPY, it's basically an ETF tracking the S&P 500.
Yeah.
SPYG is more of the growth in the S&P 500.
There's still 100 and something stocks in there, but
yeah, kind of given the idea there. I looked at it a little bit more from a planning perspective.
Okay.
You got 20 grand. Like, you just get handed 20 grand. You're just getting going. What do you do? Really, before the investment side, it is thinking through things. We don't know exactly where you are. You are, a unique person. You have your own unique circumstances. That's why these videos are like, sometimes it's like, come on.
It's a tough one.
But the idea here is, if you've got high interest debts, get rid of those, especially not knowing, the idea that there's potentially, or we're already seeing, some layoffs happening in the tech industry, things like that. And so making sure you have that. Keeping some cash in the bank for emergencies. Don't just go take the 20 grand, throw it all into the ETF, because if the market does fall and you don't have any cash and then you need to grab that, you're going to sell for a loss.
Wait. This is supposed to be, where would you invest 20 grand? You're saying invest some of it and hold back. You're playing cautious.
Yeah. Well, goes. Oh, so it's all where you invest?
Where you invest it. You got 20 grand, where we invest it. But
I'm looking for the planning perspective here on this one.
That's a good balance, because I like the idea of, just because you have 20,000 doesn't mean you should invest the 20. I just thought, hey, you got 20 grand, you're ready to invest it, pick some stuff. Let's get to work.
Yep, absolutely.
Okay, so there you go. That's the difference between us. Like, I'm like, okay,
planning,
you want to invest?
You look investing. It's like thinking through that. And so then take the match on the 401k. Maybe you can afford now, if you couldn't afford to take the match, taking the match on the 401k. I know it's simple stuff, but you're just getting going. Think through that. And I just realized something that I totally forgot to mention at the beginning of this video. This video is airing on Veterans Day. So thank you to all the veterans that are out there. I literally just thought of that. I really wanted to mention that. We have a lot of clients who are veterans, some still active. And so thank you for that. Appreciate that. Appreciate the sacrifice you guys do on a daily basis.
I love that. Same here. And that, of course, it's a rare thing. We're actually ahead of schedule. So the fact that we had to think that through. Awesome. I love it.
Yep. All right. So, okay, let's go from there. All right. 40, 45-year-old, let's say, what would you do? What are you thinking? Because you're looking at investing side. So let's hear what you got.
Well, this is going a different way than I thought here. So I'm again.
I love how we jump in and we sometimes don't prep. Like, we're not sitting here. We bring what we bring to the table so that we can see differences sometimes.
That's true.
That's the best part of this. You get raw stuff versus, hey, you know what? Let's sit down and really strategize and think of what people want to hear. No, let's put together really two different minds and see what we come up with. We
have a topic, we run with it, and in this case, we're going planning and investing, and I'm like, you giving me 20 grand, what am I doing with it? So that was for a 25-year-old, my previous example. Mm-hmm. Then I went on and said, okay, how about 45 and 65? So when I did 45, I was thinking about this last night, and I'm like, what would I do? Like, me personally, now I'm a little biased because I feel, maybe have a little more experience in advantage here.
Yeah.
Not that we can't do that for clients, but I did not know this, but of course Disney had their earnings. I did not know it was going to respond so bad to the downside. Mm-hmm. But if I had $20,000, the general answer is right now, I have nothing else to do with it. I would look for a stock around $100. It doesn't matter what it was. I was going to pick Disney because it was around 100, and then, earnings went bad. Yeah. So do that, and then I'd end up with about 200 shares.
Right.
And I would literally just find the stock with $100, the highest premium calls that I could sell, and just sell calls. Right, so on an example with Disney, 200 shares, the stock's down and all that. But if we go by the other day, the stock is around $100, almost perfectly. Okay. You're collecting about $3.30 per share, and so that's about $660, give or take, wherever you get filled at. And if you had $20,000 and you were to do something like that, that's 3 point something percent. Return on capital for the month, So I'd play that game, and if it got called away, then just restart on something else. But I like doing that stuff. So it's not
Yeah.
good for everybody, but hey, I'll take the $600 and just,
And you understand the options. So sometimes people would or would not understand those. And again, do we put the little disclosure in there? This is not financial advice. It's solely for entertainment. We're not making a recommendation on to buy a specific stock because that's...
Well, it should be clear that today, I mean, obviously with Disney falling, I am not suggesting Disney, but at the time, and I'm a Disney fan, right? So I naturally gravitate towards it. I always know where the price is at. But $100 stock is what I'm talking about. Something right in that camp, because 100 shares is 10,000, 200 shares is 20,000, of course, and you're right in there. And you could do that without margin. You can sell covered calls and everything. So
Disney fan.
Disney fan, Disney Parks fan.
Golly! Oh yeah, that's right. It's Mickey Mouse. Oh, something like that. Is that?
Wow. Wow.
So I have it. If I could hear the voice, I could do that. But yeah.
No, that was spot on, man.
Kids,
No, you did it. It was great.
All right. So all right, I'm gonna pass on this. Okay. So so for me, if I got $20,000, so you did for you specifically. For me, I'm buying a car. No.
Yeah, they should be buying a car.
No, so I'm actually in a unique position right this second, and this is where I think these videos it does depend on your specific circumstance. Would take that and just hold a bit of cash for the sake of I'm building a house. And I'm working on trying to build a house primarily in cash. And if I'm going to do most of that, kind of strategizing. It's a strategy.
Okay, I gotta interrupt you there. Common question. You've got 20 grand. Well, you're going to use 20 and plus a lot more to build a house.
Yep.
How long until you buy the house, and should you put it in something while you're waiting to buy the house? Would you take that risk?
Yep. And so it depends on the strategy you're doing. So part of what I'm doing, we do line of credit on money. So part of my money that I have that was in cash when I sold my house is actually invested in the market. I mentioned that before.
Yep.
Looking to take a line of credit on that. I know that I'm going to actually need some liquid cash too, and the fact that it's not tied to the markets. So I think that it's going to depend, again, on scenario. For me, I'm keeping that aside because I'm looking to make the move in the next 6 months.
Oh, okay. Yeah.
So if I'm looking to make the move, another couple years, totally different scenario.
Yep.
But next 6 months, there's just too much if, ands, buts about it. People say, well, we'll buy the I bond.
Yeah.
You've got those options that are out there. The problem is I just told somebody yesterday, that's dropped down quite a bit in percentage from 9 to 6 something now.
Yep.
And interest, that's only for 6 months. It's going to, potentially drop again. And then from there, so it's just figuring that out. Maybe a high yield savings account, something like that. I mean, there's, the pennies you can get off of 20,000 for me just keeping it in cash. Well, it's not going to be much, but.
And not to get off topic, but the whole 6% thing, it's like 6.7% or something on the I bonds. That's your annualized rate.
Correct.
But it's only good for 6 months, right? So if that rate goes down again, your total net return is going to be less. People fall for that, especially with like 6 month CDs and things that people think, oh my God, I'm making 4%. Okay, a year, right? So there's a little different story there.
Yep.
All right, so you buying a car, you're not buying a car.
Buying a car. I probably, as much as I hate to do it, I'm probably going to have to break down and buy a vehicle in the next year or so. We'll see what happens.
Make it something cuter than a Ford Focus now.
Again, going back to building a house, I'm probably gonna have to get another truck so that I can,
You might want to get a golf cart.
Awesome lumber.
Oh, okay.
All lumber.
Lumberjack Eric over here.
It's right. You see the beard coming in, man.
No, that's thick. You got to keep that.
I'm trying to step up my game a little bit.
He's growing the hair. Look at this. I'm losing the hair. All right, 65. You guys are up next, man. What would you do 65? You want to take it? Do you have something for 65?
Yeah, and so I'm thinking, this is a really interesting one because at 65, generally speaking, you've retired. What are you doing with 20 grand? You have some people that are coming into money, inherited money, different things. I'm going more on the side of I've recently spoken to quite a few different clients that are wanting to start, as long as your plan is set, you're on the right track, gifting money to children.
Okay.
And so if you're gifting the money to the children, it's really thinking through that a bit. And maybe, that's not your scenario specifically, but if you're helping the children, there's a lot of conversation that comes into play there. First is where the children are at with their specific lives. I mean, if you're 65, you're a late starter and you've got an 18-year-old, maybe you're not going to throw them 20 grand. Maybe you're helping them with college.
Yep.
But at the same time, maybe they're in their 30s at this point, and maybe they're starting to be a little bit responsible with the money. Maybe they can handle the 20,000. Maybe it's helping with the down payment on a house, or making sure if their income limit's under the Roth income limit, set them up a Roth IRA. Because as long as they have income coming in, I mean, the Roth's golden. You can at least do $6,000 this year, $6,500 next year there.
Yep.
Taxable account. I mean, with us, you get over $100,000 in a taxable account. They can do the line of credit against that. Just what I'm doing with the house build.
Yep.
So there's so many options there to think through. It's just having that deep conversation. So I don't want to pigeonhole it on one specific thing.
Yep.
But I want to hear yours because I know it's investment specific.
Well, to add to that, I would say be smart about that too. How you give your kids money. $20,000 is not. There's no need to set up like a trust or anything. You're wasting time and money there. So really, don't fall for that. That's really popular in the legal community right now. But 20 grand is, piece it out to them however you're going to do it. I took the approach of we got a 65-year-old client. Maybe they've got a Roth IRA or IRA or something. They don't mind volatility on the 20,000 because it's 20,000 and hopefully it's 65. You have a little more than that.
Yeah.
And so I said, well, what's like something cool I could do? So in my example here, I just basically built a portfolio with some strategy here. I call it best yields because all I'm doing is saying every single quarter, what I want to do is I want to cycle in the highest yielding stocks. I don't care about price. I don't care about anything else. The volatility is what it is. But I basically did that, and I said, okay, right now, this is elevated, by the way, but I built a portfolio. It yields 9.42%, volatile as hell, right? So that's something to consider.
Yeah, that's
I was just trying to put something together. And I said, okay, well, that's great. So we'd rebalance this every single quarter and drop out anything that's, maybe they cut their dividend or maybe there's something that's just more competitive. And building a portfolio that sort of rolls, kind of like you would roll CDs. You're just rolling in and out of positions there. You can expand it, of course, but if there's something that you can add into it, that would be what I would work on. What I want to point out is if you do something like this, know that it's going to be a lot more volatile. This is nearly twice as volatile as the stock market.
Yeah.
So this is the kind of thing for only 20 grand, right? Not your Roth IRA or something. You may do this in a Roth because you'll take the dividend, right? No tax-free dividend. But this would be like a sliver of your account can afford that volatility. Have a lot of retirees that we know we can't take their whole account and do something like this, but we can take a piece of it, and they like that, right? It's a little extra cash coming in that they know is tax-free and can withdraw. So
cool.
Just the thought process of what about a dividend cycle type portfolio, and that's what I got there.
Nice.
Yeah, a little different.
65. So I got to give a quick shout out. Dean K. Michigan says financial advice that is good to the last drop.
Oh,
so
that's a good one.
So that's somebody I mentioned. Hey, throw me some comments. Let me know a tagline for this if I flip this cup. That's people have pointed out. So
top notch right there.
There's one right there.
Dean, you gonna send Dean something, man?
Hey, I don't know. No Dean specific, but
Dean, man, hit us up. What do you
send
him a cup?
A coffee cup.
Yeah.
There we go. We can find who Dean is.
Oh, well.
Dean K. Michigan.
Well, Dean Kane is probably not the Dean Kane.
It's not the Dean Kane.
No. I mean, that'd be cool, but probably not.
We'll see.
All right.
Well, that's good stuff.
You want to, that was the sign off then. We're going to go with that. Financial advice, good till the last drop.
Boom.
Enjoy your day, guys. We will, and enjoy your weekend. Again, big thanks to all the veterans out there. Enjoy your Veterans Day weekend, and we will see you soon. Adios.